Welcome back to Candlestick Signals for today's market, September 8th, 2025, where we'll dive deep into the candlestick signals and sector highlights that shape the trading landscape on September 8th, 2025. Buckle up as we uncover the hidden messages in the charts and reveal the sectors poised for potential breakouts. Are you ready to optimize your trading strategy with fresh technical and sentiment data? Let's get started. Our market snapshot reveals a rally in U.S. equities, with the S&P 500 and Nasdaq posting impressive gains. This upward momentum was primarily driven by robust performance in technology stocks and continued strength among small and mid-cap companies. Investors' optimism was fueled by hopes for a September interest rate cut, setting the stage for an exciting trading day. The technology sector led the charge, posting an impressive gain of 7.9%, and a staggering market capitalization change of $57 billion. Software and IT services sub-industries were the main contributors to the sector's growth, each surging by approximately 8.2%. Hardware and storage weren't far behind, with a weekly return of 7.1%. The sector formed a bullish continuation candlestick pattern, signaling that the current uptrend is likely to persist. This pattern suggests that buyers remain in control, pushing prices higher. With strong momentum behind it, the technology sector may well continue its positive trend in the near future, potentially reaching new highs. Moving to the basic materials sector, we observed moderate growth, with selected materials stock leaders like Newmont and Agnico, Eagle Mines posting strong gains. The overall sector market cap moved positively within the week, reflecting ongoing demand in core commodities and industrial resources. Basic materials saw a 3.8% increase, translating to a market capitalization change of $28 billion. A bullish engulfing pattern formed on Wednesday, indicating a potential reversal of the previous downtrend. Macro drivers played a significant role in today's market movements, including upcoming Federal Reserve meetings, anticipated inflation reports, and lingering optimism from the recent Jackson Hole Economic Symposium. These factors contributed to the positive sentiment across various sectors and market capitalizations. Now let's delve into the candlestick structures that dominated today's trading landscape. On September 8, 2025, we observed several prominent formations. Doji and near doji patterns were prevalent, with 486 instances across the market. These formations signal indecisiveness or potential impending reversals, suggesting that traders should remain vigilant for sudden shifts in market direction. Bearish engulfing patterns appeared in 288 stocks, primarily in large-cap and energy sectors. This strong reversal signal at recent highs warns of potential downturns in these areas. The hanging man formation was particularly abundant, showing up in 846 stocks. This highly bearish signal, especially prominent in utilities and energy sectors, calls for caution in uptrends and may indicate upcoming selling pressure. On a more positive note, bullish engulfing patterns were observed in 88 stocks, predominantly in the technology and small-cap sectors. This formation indicates strong reversal potential at market bottoms and could present attractive entry points for savvy investors. Other regular signals included 86 hammer formations bullish, 265 bullish harami patterns, 220 bearish harami patterns, and 37 evening star formations. These diverse signals provide a nuanced picture of market sentiment across different sectors and capitalizations. Interpreting these technical signals, we can draw several key conclusions. Bullish reversals are supported by numerous hammers and bullish engulfing patterns, especially in small-cap and value-oriented stocks. This suggests potential opportunities in these areas for investors seeking growth. Conversely, bearish reversals and caution are suggested by the high count of hanging man and bearish engulfing signals, particularly in large-cap and mega-cap indices. The prevalence of doji patterns across sectors may indicate market hesitation ahead of upcoming economic data and the Federal Reserve's policy decisions. Let's now turn our attention to sector and stock highlights, where we see some interesting valuation disparities and candlestick dominance. The technology sector, while fairly valued to slightly undervalued, shows bullish engulfing and upside signals. Key stocks to watch in this space include Broadcom and Nvidia, which have shown particular strength. The communications sector presents as undervalued, with doji and bullish signals prevalent. Alphabet stands out as a stock to monitor closely in this sector. Real estate, another undervalued sector, displays bullish harami and hammer formations, suggesting potential upside. Energy stocks are currently at fair value, but bearish engulfing and hanging man patterns dominate, particularly in oil majors and oil services companies. This mixed signal calls for careful analysis before making investment decisions. The healthcare sector, traditionally a value play, shows a mix of bullish and bearish signals. Medical device makers in this space warrant attention as they may offer opportunities amidst the sector's varied landscape. Utilities currently overvalued are dominated by hanging man and bearish harami patterns. This combination of overvaluation and bearish signals suggests caution when approaching this sector. Sentiment and outlook for the market remain broadly positive for growth. Tech, an undervalued value in small-cap stocks. However, the heavy appearance of doji and indecisive signals warns of increased volatility tied to macroeconomic catalysts. The short to medium-term outlook is bullish for undervalued sectors, but traders should remain cautious as hanging man and bearish engulfing patterns are prevalent in overvalued and momentum-driven names. To summarize the day's candlestick patterns, we observed 486 doji and near doji formations across sectors, indicating widespread indecision. The 846 hanging man patterns, predominantly in utilities and energy, signal bearish sentiment in these areas. Bearish engulfing patterns appeared in 288 stocks, mainly in large-cap and energy sectors, while 88 bullish engulfing patterns were seen in tech and small-cap stocks. Bullish harami formations were noted in 265 stocks, particularly in real estate and healthcare, while 220 bearish harami patterns were observed in utilities and energy. In conclusion, September 8, 2025, presented a complex tapestry of candlestick signals. With high counts of indecision and reversal patterns, the hanging man formation dominated, especially in high-cap industries like utilities and energy, suggesting a bearish tilt in these sectors. However, tech and communications displayed constructive bullish formations, while small caps and value stocks presented the most attractive risk-reward outlook. As we wrap up today's analysis, remember that successful trading requires more than just identifying candlestick patterns. Traders should watch for confirmation beyond today's setups, especially as macro events and rate decisions loom on the horizon. Stay tuned for our next market update, where we continue to unravel the mysteries of the charts and guide you through the ever-changing landscape of the financial markets. Until then, happy trading, and may the candlesticks be ever in your favor. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.